Welcome back to the show, Crypto Bloody Sunday. Why did crypto crash? And guess what? Coinbase UK news, US government XRP ledger news. We got that and so much more. By the way, XRP bounced back like Mufasa. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show. You can follow us on X, YouTube, and digperspectives.com for exclusive content. Right now, $3.29 trillion market cap for crypto. The market's off 7.2%, but look at these numbers here. Bitcoin, 97,900 plus. Ethereum, 2,600 plus. It took a huge hit. XRP took a huge hit. Was at the number 4 spot just an hour or so ago. But looky here now, back at the number 3 spot, all the way up to $2.53. We've gained 11.6% in the last hour. Still off 10.6 on the 24 and off 15.1 on the 7-day. If you're scared, say you're scared. Ranging between $1.94 and $2.81. I bought that dip. You damn right I did. Let's get into it. Oh my goodness. Have we figured this guy out by now?
MicroStrategy. Okay, look, I say if you want to own Bitcoin, own Bitcoin. I own Bitcoin. You should own Bitcoin. Bitcoin's a great thing to add, to have in your portfolio.
And then we saw the crash, right? You know, it's not funny, but it is if you know the answers. We know what's going on in mainstream media. Crypto traders believe Monday's bloodbath could be a buy the dip opportunity for several reasons, stemming from the eventual growth of and demand of dollar-backed stablecoins. I'd like to add tariffs. I have said this since the tariff conversation has been announced, that tariffs go hand in hand with the new digital economy and the conversation of a strategic digital asset reserve stockpile. These conversations are all connected from where I'm sitting. And I believe that's why these market reactions are really across all markets. Meanwhile, in the crypto market, we saw crypto liquidation soar to $2.23 billion in 24 hours. It was larger than Luna, COVID, and the FTX collapse. We've just witnessed history, but we're bouncing back from it. DAI says this, I think it's so spot on. Most of what's going on in markets, not just crypto, is a reaction to uncertainty around Trump's new tariff policy. I think he's setting the stage for getting rid of the income tax. I bought the dip twice yesterday. I happened to buy it once, and largely, I don't mind saying. What's in front of us in crypto is game changing. Get rid of income tax and capital gains on American crypto, and yesterday's crash will be a joke compared to the boom to the upside. I think he's got it spot on. I couldn't agree more. And this really puts it in perspective. The low XRP price yesterday was at $1.77. It's over $2.50 right now. Any questions? Come on in. I share this. Not only did I buy the dip last night, but I was numb inside when I did it. Hard days may not feel good, but in order to accomplish something we've never done before, it will require us on some level to become someone we've never been before. Success is for the bold. Lock in. Meanwhile, this shared by DJ Peter Vass, Wells Fargo approved XRP for payments. His Google search yields this. He provides the link for us. Yes, Wells Fargo has approved payments in XRP for credit cards and loan debt. In August of 24, Digital Asset Daily reported this. This is just another hint that we have so much in front of us, and I'm going to get to the long list of that in just a second. But add this to the list. Coinbase secures a spot on the UK Financial Conduct Authority register, allowing it to offer crypto services in the country. And here's a thread here to really understand where we're going. This is a thread from Bitwise, Matt Hogan, CIO, who's incredible. Shout out to Matt. I'll move through this very quickly, but it is from the thread 8 that is really going to get you. The traditional 4-year cycle is it over in crypto? He thinks so, and I do too. Bitcoin is historically moved in a 4-year cycle with 3 big up years followed by a pullback. That's exactly right. This year has been driven by the same forces that drive broader cycles of growth and recession in the general economy. The cycle starts with a catalyst that brings new investors, new capital into the market. In 2011, for instance, it was the creation of the first companies that made it possible for individuals to buy Bitcoin, Mt. Gox, Coinbase, etc. Once the bull market started going, it gains its own momentum. Rising prices attract attention and more money follows. Eventually, investors get greedy and add leverage. Froth and fraud appears. Sometimes legacy infrastructure cracks under the strain. Eventually, something breaks in 2014. It was the collapse of Mt. Gox in 2018. It was the SEC cracking down on ICOs, except for Ethereum. Whatever the cause, the pullback is painful. There's rapidly deleveraging. It says here, existential despair. But eventually, a new breakthrough occurs that restarts the cycle. The current cycle was born out of the massive deleveraging that occurred in the wake of the 22 scandals, FTX, Three Arrows Capital, Genesis, BlockFi, Celsius, Voyager, and others. The catalyst that jump-started this cycle occurred on March 10, 2023, when Grayscale convincingly won the opening argument in its legal case against the SEC regarding the Bitcoin ETF. Though the verdict came months later, it was apparent from that moment that a Bitcoin ETF was coming and that it would bring crypto to the masses. Sure enough, the ETFs launched in January of 24 and set records for flows. Prices went up. Now, here's where you really want to listen. In a classic 4-year cycle, we'd be gearing up for a pullback in 2026. And to be fair, I do see the early signs of leverage building as companies issue debt to buy Bitcoin and Bitcoin collateralized loans ramp up. But we have something different this cycle: the change in Washington's attitude towards crypto. Consider the crypto executive order it called Growing a Crypto National Priority. It laid the path for a regulatory framework. It contemplated establishing a national crypto stockpile, which it's still contemplating. The change in Washington paved a path for mainstream institutions to enter crypto in a massive way. But here's the thing: mainstream institutions don't move on crypto native time frame. The change in DC is that it will be felt over the course of years, not months. It says, in the absolute best case scenario, it will take a year to align on a new regulatory framework for crypto and a similar time period for big firms to move from planning to action. Wall Street and Main Street institutions are like giant tankers, not speedboats. If institutions really start orienting to crypto next year, we will really have a new crypto winner. Will we really have a new crypto winner in 26? I'm not sure. The scale is so big, the ETF brought hundreds of billions of new investor capital into crypto. The change in DC will bring trillions. Crypto has moved in 4-year cycles since its earliest days, but the change in DC introduces a new wave that will play out over a decade. My guess is that when the classic deleveraging starts next year, it will get swamped by this new, bigger trend. What does it mean? It doesn't mean the 4-year cycle is quite going away. Leverage will build up, excess will appear, bad actors will emerge, and at some point, that could get washed out, which will introduce volatility into the market. But my guess is that any pullback will significantly be shorter and shallower than in years past. We are in a new mainstream era of crypto. It's going to be interesting. We've entered a new era of crypto. It's going to be an exciting few years. I think this is so spot on from Matt right here. And then it reminded me of Monica Long, who said this also: crypto will break the speculative hype cycles that have defined the booms and busts for the industry since Bitcoin's inception. come on in. And then Monica said this as a reminder. 15 of the 25 largest banks globally have already piloted tokenized asset projects. She says, I expect several of them to launch market-ready offerings in the U.S. in 25 if they have clarity from the U.S. government to touch crypto. Seems very possible for this to no longer be an issue this year. Now, how about that? And then we know this, Charles Hoskinson from Cardano.
Perhaps one of the biggest projects that's being discussed right now is whether it's possible to put the entire U.S. federal budget on a blockchain, which is a pretty extraordinary thing when you think about that. That's trillions of dollars. That's tens of millions of different sets of hands that are interacting with it. There's hundreds of thousands of outflows to different nations and to different companies. Perhaps one of the biggest...
There you have it. And what's interesting to me is why wouldn't that be XRP Ledger or Stellar or both? The same sentiment from Elon Musk. Career Treasury officials are breaking the law every hour, every day by approving payments that are fraudulent and or do not match the funding law passed by Congress. Well, Mario Nawfal says, should the Treasury be put on blockchain so this doesn't happen? Elon, yes. Well, why not put it on the XRP Ledger? We already know they're working with Treasuries Fed now. Yeah. Why not use the XRP Ledger for it? You know, tokenize all the debt, which is tokenization of bonds, which we know has already been happening with Elijah and then Ondo Finance. Look at all the things in front of us that are still to come. How could we even be worried about a crypto crash, a flash crash? I bought that dip so hard. Oh my gosh. DAI says, I bought the dip and will continue if there are more because of what's in front of us. Here's the reminder, and I will too. Salute to the GOAT. Case resolution. XRP ETFs. The start of real-world asset tokenization, which is underway now with treasuries. More XRPL stablecoins, come on in. Income tax gone, can't wait for it. American crypto tax-free, love that for us. Stablecoin legislation. Crypto legislation, banks coming in, institutional buying, no new money has arrived yet. Digital asset strategic reserve, Super Bowl crypto ads kicking it off, Ripple IPO announcement, NDA's gone, rolling announcement post expiration. New SEC chairman confirmation, crypto council announcement, the creation of crypto exchange in Dallas. I'm tired of typing, but there's so much more. And he's absolutely right. That's what we got in front of us. I am excited. And when it comes to the crypto crash, I want to go back into 2017. Don't worry about these prices here. This is from 2020 chart that I just pulled randomly. But shout out to Crypto Bull. Give him a follow. He does great stuff. But I want to go back to 2017, 2018, because I was there for that, and I was there for the 21. But I just want to focus on this for a second. From when this really started, it was back in April, around April, when it really got going, and then to just into 2018. That whole time right there, right there. But what I want to go back to, because this fractal actually picks up from that candle right here on up to here. And he posts it so you can see the effect of what it could be. But I want to go back before he copied the fractal of this candle. I want to go down to here. Just look at, we were about in this range for ourselves and the explosion we had been witnessing currently. But notice in 2017 how everybody was experiencing, I remember this, we went up here like this and then we saw it drop way back, go sideways, drop down a little more. Then it got going again. Then we had an even longer sideways and pull back and sideways motion before we saw another burst. That's the way charts work. And this looks a lot like that flash crash we just had, right? Like I said, this fractal doesn't pertain to what this conversation is. I'm just looking at previous years and understanding that we see ups and downs even when we're in an up market, in a bull cycle. we still see those prices move and retrace and pull back and retest. So, look, it's not financial advice from me or anyone else. It's just my digital perspectives. Again, I highlight the market cap conversation. When you need to pull back and you need to reset yourself and not get hung up in the minute-to-minute fear that may be happening from something like a flash crash, one of the things I like to do is say to myself, well, all that good news that we just ran that list of DAI shares as a reminder, and ask yourself, how big is this cryptocurrency market at the end of this year, 2025? Should we see half of that reminder list taken care of in a positive way? Just half of that list. Is it 8 trillion, 10 trillion crypto market? 15, 20? I don't know the number. But this is where I start to calm down, and like flash crashes over a weekend or a couple days don't bother me. You know, not only because I know what I hold, but because also I've been here a long time and I've witnessed these things. And ultimately, none of the real things that will bring the real price driver of utility to XRP are really fully in motion yet. So you ask yourself, what's the size of the crypto market you believe at the end of this year? And then ask yourself, how much of that does XRP capture in its market cap? So if we have a $10 trillion market cap, do you believe XRP captures 1 trillion of that? 4 trillion? 500 billion? I don't know the answer. It's all relative to what you believe. I just know I believe in it so strongly, I'm here to see what happens, because I do believe that XRP is designed to go to 4 and 5 digits as a token in price, but because it has so much utility and purpose for the entire world, and certainly the United States. And that's why I also believe it will be a part of a digital asset strategic reserve stockpile for the U.S. Not financial advice from me or anyone else. It's just my digital perspectives. I'll catch all of you on the next one.